we talk about bubbles all the time. We know investors know what they are. We know where they kind of think they're showing up. But give us the numbers. Just how much of a bubble are we talking about in certain parts of the market?
Great to be with you, Dom. And we've been surveying our readers, our newsletter readers, for the past 15 months. And no matter what, these readers have remained bullish, but they're feeling bubbles. 44% say they're bullish despite the bubbles everywhere. 63% say that they feel that we are in a bubble. 59%, Dom, say that they feel the market is overvalued, but only about a third are making changes to their portfolio. So they're grabbing the wheel with both hands here as they try to steer through a lot of this volatility, especially among the meme stocks, especially among cryptocurrencies, but they're invested in both.
So just how invested are they? I mean, among your reader base, among your newsletter base, there has to be this notion that there are other asset classes out there besides just meme equities or cryptocurrencies, but just how heavily invested are those particular folks over at Investopedia into things like Bitcoin and Dogecoin and AMC Entertainment and GameStop?
Sure. This is a pretty diverse crowd. So 18 to 80 across the country with portfolios on average of about $100,000 or more in investable assets. So they hold blue chips, they hold dividend paying stocks, they hold muni bonds, and they also own crypto and meme stocks. But in the past year, people have doubled. A lot of our readers have doubled their exposure to cryptocurrencies. Only about 9% held it at the beginning of the year. About 18, 20% hold it now. In terms of the meme stocks, a few people have gotten promiscuous with it and added it to their portfolios. But in general, these are blue chip investors who like Apple, who like Amazon, who like a lot of the companies you see in the Dow 30 and a lot of the mega cap stocks. But lately, they've also been adding some Ford and some ExxonMobil. In terms of the meme stocks, though, they have been looking at them and watching what's happening. And we're watching anxiety rise among our readers. We measure that through the Investopedia Anxiety Index, which measures their search volume around fear-based terms. And Dom, they've been looking up terms like naked shorting, short selling, trading halts, obviously, because of what's happened with some of these meme stocks. So anxiety's been rising among our readership in the past few weeks. It's at a 3-month high, nothing like it was back in March, but it is bubbling up as a lot of these meme stocks go on these wild rides.
Caleb, we're showing some of the stats right now on top spiking articles, over this past week, a 7,000% increase in naked shorting interest, a death cross definition, 2,500%. And by the way, can we show the chart that we just showed with the anxiety index? It's creeping up, but it's nowhere near the levels that we saw earlier this year when the meme stock frenzy was going kind of crazy with regard to what's happening now. Is that maybe an indication, perhaps, that things can still go higher despite the anxiety that you're citing right now?
Oh, absolutely. We saw a lot of anxiety even in April, May, and June of last year when the markets were recovering and sprinting higher out of that bear market. So anxiety goes both ways, and it does measure market-related fear-based terms like naked shorting, like short selling, but it also measures terms around the economy. So a recession could be in there, but we're seeing right now the anxiety is around the market-based terms because so many of our readers and people who don't regularly read Investopedia are pouring in to figure out what it means to short sell a stock, what it means when somebody's naked shorting. Maybe I blame Melissa Lee, who brought that up the other day for that, but there's a lot of interest around these fear-based terms in terms of what could happen to these meme stocks, because whether or not they're invested in them, I think our readers believe, and a lot of folks believe, that these meme stocks are driving a lot of the sentiment in the overall market.
Hey, so Caleb, before we let you go, just a few seconds left here. How does this resolve itself with your readers and your viewers out there? I mean, is this a sign of the top?
No, it could be. We've seen this before in different asset categories. We saw it in crypto. We saw it in stocks at the beginning of the recovery last year, and certainly back in February. This resolves itself. There's going to be probably a little bit of a washout here, but our readers are smart. They're looking at what's happening across the market. And as you say, they're not all invested in meme stocks or crypto. They do have more exposure. This is like any other market cycle, just a lot more heat underneath it, Dom.
Shepard Smith here. Thanks for watching CNBC on YouTube.